Well, food inflation is certainly one of the causes of the uprising in Egypt. Sugar, wheat, they've certainly been on the rise. They've all spiked higher in the past year. So what impact will this crisis in the Middle East and inflation fears impact the markets back here at home? We want to bring everyone back in. Our market all-stars with us. We've got Mark, Steve Grasso, also Steve Leisman still sticking around. Mark, you know, if food inflation is basically here to stay, as most people think it is for the foreseeable future, how is this affecting your investment strategy?
Well, we saw in Archer Daniel Midland's a really strong report, so there is a play in the food stocks. I do think that food inflation affects the lower class much more than the middle and upper class. So there isn't as much of an impact on the economics, the discretionary stocks as you might think. I think that they'll do well in this pullback that we're expecting in February. So the retail might be a play, as we were talking about in the prior segment. I think that there's an opportunity there. But as far as the food inflation, I think the food stocks, which normally don't do well at a time like this, might actually pick up some relative strength.
Yeah, Keith, what do you think? Because, you know, the weather that we were talking about in the last segment is going to have an impact on food inflation as well. It seems like it is here to stay. Who would benefit?
Well, it's absolutely here to stay, and the problem we have is a commodity inflation right now. We're not having asset inflation, and the Fed is creating a commodity inflation. And I think the way to play it certainly is through the grain index. You're going to see prices rise quite drastically, I think, in grains, in food, as emerging markets, emerging countries, they increase their caloric intake as they start to gain more wealth. You're going to see oil increase. You're going to see gold and silver, most likely, if we still have a crisis, be really the place to be to protect yourself here. But as far as commodity goes, food commodity goes, I think the grain index, JJG, might be the best way to play it for the average investor. You've got to be very careful with commodities in particular because you can get in a lot of trouble. But overall, that we are going to have commodity prices increase without a doubt. The Fed has told us that. They've lowered the dollar. That's what they're looking for, and that's what we have, and it's here to stay.
Steve Grasso, the last two guests have said that they like the grain index or food companies. Is there a short side of this equation? In other words, is there a sector you can look at that might actually be at a disadvantage? For example, restaurant stocks.
Yeah, I mean, restaurant stocks is one angle, but a stock like General Mills, I wouldn't be buying at these levels, but I'd be buying Double D. I think that's a more diversified way for the average investor to get exposure to that spot and think about food inflation, think about that play that way. A Monsanto or a Double D is a much easier way to play the grain space than the other ways.
Steve Grasso, I want to ask you real quick, are traders on the floor watching these pictures out of Egypt that we're seeing? Because obviously there's a lot more tension there today than there was yesterday. It seems like things are beginning to boil again. And does that make traders think that maybe the relief in the market was premature?
Well, traders, like we discussed last week, those quick, if you're nimble, you can really be proactive on it. I think the event happened last week on Friday. Before a weekend, no one wanted to get long any names based on Egypt. We've sort of seen that event take place already, and we've rallied back 30 handles. So I think that headline risk is over for the moment. Can it increase? Can it get worse? Yes. But right now, no. Traders aren't preoccupied.
Okay, I want to throw our professor here an economics question. I mean, at what point does all this food inflation and energy inflation, for that matter, start to catch up with the rest of the economy back here at home, or will it not?
You know, I think that's a great question, and I think it really has a lot of bearing, Trish, on the whole investment strategy people take. I think what the guests were saying earlier makes a lot of sense. You can play near term what's happening with the commodities, but then you have to kind of filter that through and say, well, what's the longer term effect on the consumer, on overall economic growth, and how does the Fed respond? I think one thing I would watch, and I'd watch this on Friday when it came to the jobs report, I'd watch incomes. Incomes are going to be very important. Hours worked, hourly earnings are going to be very significant. Can the consumer afford this rise in commodity prices? Does it cause the consumer to pull back in other areas? And what are those other areas? Finally, if it does get out of control, which I don't actually expect, Trish, but if it does, the Fed could be forced prematurely to step in and maybe cut off what's been happening with the expansion. I think people have to be careful about that, though.
Yeah. All right. Thanks to everyone for joining us. We appreciate it. Up next,